Hey guys, how you doing? This is Konam here, your mentor from Konam Trading. Thank you guys for kindly clicking the link to watch this video, and I guarantee that you're going to learn a lot. So, if you're one of those traders who have been blowing their accounts and looking for strategies, going over strategy after strategy, trying to find a way how you could try to recover your money and make some money out of trading, and you've been failing to do so, I would like to say that that stage is finally come to a stop, because this is your um, day that everything that all the things turn around. So in today's video, I'm going to be showing you how to um, trade this setup and trade and make money. As you're going to see with the examples that I'm going to be giving to you, that this trade allows sorry this setup allows you to make um trade daily and get out of the markets with lots of pips, with a large amount of pips. So yeah, let's get into it. So today's topic is candlesticks valued gaps. Candlestick valued gaps, these are gaps that are formed on big body size candlesticks, and they're formed when price moves away, leaving gaps. And these candlesticks valued gaps can be used for entries and TPs. I hope you get that, and I hope you've taken what I wrote on the screen there, candlestick valued gap. So that's all, guys. Candlestick valued gaps, they're just candlestick big body size candlesticks that experience price moving away from them, leaving gaps on them. And these candlestick valued gaps can be used for entries and take profit. So as you can see on my screen right now, um, I have shown you, I'm indicating those candlestick valued gaps with these yellow boxes that I drew there. So as you can see that these yellow boxes are covering the gaps between these big body candlestick size, um, and where price lives off. So price moves away and leaves gaps between the next and previous candle. So you can see here, I even marked it with a line right here from this point to this point. So I didn't mark all of them because I just wanted to show you this. So with time, you just know that it's from this point to this point. So this was just to show you from where to where. So as you can see, okay, the boxes had exceeded a bit. So now that's perfect. So that's a candlestick valid gap. So a valid gap because this we are going to use these valid gaps to our advantage. How are we going to do that? We're going to use them as entry points and take profit areas. So oftenly price leaves these gaps, and it always wants to uh, rebalance these gaps, filling up. I mean, by rebalancing the gaps, I simply mean that price always wants to fill up the gaps. So you are going to see with the examples that I'm going to be giving to you that price always and will always come back to rebalance these candlestick valued gaps. That's why they are gaps of high value, because the price always has to make a way to come and rebalance the gaps and rebalance the gaps, meaning it has to come and fill up these gaps. So this setup, this filling up of the gaps and rebalancing of these candlestick value gaps, you can use it to your advantage and take trades from it, and use it also to take as take profit area, and as entry triggers, as an entry trigger. So as of me, I'll be showing you real quick, but I also wanted to tell you that I don't only trade this trade solely off the candlestick valued gaps. No, I always make sure that I use it in combination with another strategy, with another mini strategy. It could be order blocks, bullish order blocks, or bearish order blocks, or breakers, which I'm going to be talking about in the next few sessions, maybe yeah, in the next few sessions. And I'm going to give you a brief insight on them in today's video. So I don't only trade solely, that's a disclaimer. You don't only trade solely off these fair value gaps, but as uh, use it as use it in confluence with order blocks or breakers. So as we know, as you all know from what I always say, market structure is king and confluence is queen. So you don't make sure that you don't miss that out, and you always have to use it in combination with these things, just the way that I'm going to show you right now. So yeah, so let me show you. So you can see with this first value gap right here, candlestick value gap right here, you can see right here, right? You can see it, right? So I'm going to show you. So as I said, that price always have to find a way to come and fill up and rebalance this setup. So let's use this to our advantage. So as you can see with this first value gap right here, over here, it has not yet been filled, and you can see it has not yet been filled up to this area. So we know already that price is going to come down and fill up this gap and this gap again, and this gap right here as well, and this gap right here. So we know that already price is going to tremble down and fill up these gaps. So simply, we now know that we're going to be taking a trade to the upside. We're going to be taking a trade to the upside. So now that's when we use the confluence that I was talking about. And on this one, we'll be using the order blocks, the bullish order block that we talked about in the previous sessions. You can easily click. Uh, I'm going to leave the links to the videos below and in the top right corner, in the top left corner, sorry. So clearly you can see that this is a bullish right here. So the trade entry would be beautifully from this point up to this area, up to this area. Yeah, this is where our take profit will be. This is where our take profit will be. So the entry will be right here from this area. Then our stop loss is going to be from this area, right below the, it's going to be right below the order block. So that we make sure that no matter what happens, price don't get. So you can see, yeah. So the other way that you could do this is by using a limit order. A limit order could work into could is can work to be an advantage to you in the ways that you'll be entering a trade way earlier. I hope you get what I mean. And I mean this, instead of taking the trade from up here, you'll be taking the trade from here, from here. So sell limit will help a buy limit. I mean, a limit order will be to your advantage in that you can see how much you make up to this point. That's 119 pips for the first trade. The first trade, 119 pips. I'm just going to make it smaller so that I can continue to. So that's the first trade. That's the first trade, yeah. So as you can also see right here, we have a yellow box of a candlestick valid gap right here. We know that it is going to be filled and we're looking to take a buy order. So from this point, you see that because of this week right here, this trade would be invalid because of this week right here. But you could simply take the trade because uh, they trade closed, the candlestick closed within the order block, so it is still valid in that way. But in the sense of the limit order, it would have been triggered and the stop loss would have been hit. So re-entry would be clear, and you could also take a safe trade, a less risky trade after this evening star, this bearish candlestick. Yeah, you would easily take it from this area. So I'm not going to consider this one because there are many of these trades. So let's move on to the next value gap right here. So you can see that we know that the price is going to tremble down to fill up this candlestick here. So we are going to expect a buy order. So as you know that from the what? We know it as from the lowest down close candlestick, the lowest bearish candlestick with a big body from our bullish order block rules. So our limit order will be triggered right here. Our limit order would have been triggered. Um, and instead of putting our take profit to this area, we're going to align it with this area. Why? I'll show you in a bit. Let me just adjust the stop loss to fit in. So you can see like these are really profitable trades, and the risk reward ratio is really sweet. This is 90 pips. Why? So that's the second trade, 90 pips. The first one was 119. I want to show you how profitable this and how profitable this is, and how this is going to help you stop blowing accounts and retrieve your money. So because of that, and now I am sure that you now know the story, the order block right here, confluence. You know that confluence. So from the midpoint of this candlestick, that's where our sell order, the midpoint of the order block, I mean, that's where our you see, and our stop loss will be right above our order block right here. So order blocks, guys, I go through them strongly in the previous videos. I made them entirely. I made the videos entirely for order blocks. So our take profit would be to this recent low right here, as you can see, to check the recent low was right here. This is how you verify your low and your highs. As you all know that wicks are manipulation, so we don't rely on them too much. And this trade would have made you 70 pips. So guys, this is in real time. This is real price. I'm opening GU on my funding talent server. My funding talent server. That's the third trade. First one, second one, third one, and the fourth one that I showed you. We could have made money out of it, but I chose not to use that one because I really want to use like significant, powerful confirmations for this strategy, so that you actually believe that This is actually a money maker. As you can see, this is a very big. We love candlesticks that are this big because they really prove that uh, they really show the candlestick valued gaps. They really resemble it, and they really work to our advantage. So as you can see on this one, so we know that price is going to come down and go to the upside. Then what do we also see? As I had mentioned before, that we are going to be talking about breakers as well. Since breaker is also another confirmation that we could use. What is a breaker? A breaker is just an up close. It is just the last up close candle at a swing high. So the last up close at a swing high. So it is this one. It is this one. So it is supposed to run up to this area, the closest to it, but we're not going to use that to that area. We're going to simply use to this area. So it is this candle. Let me go again into the definition of a breaker. The last up close candle, bullish. That's a bullish. The last bullish candle, or at the swing high before sweeping the low. The sweeping of the low is being done here. It's being done. Yeah, this is the sweeping of the. So it's low. Yeah, then the high, the last high, then the sweeping of the low. The low is at this. Let me draw it perfectly. So price is moving like this, then like this to the high, then it sweeps the low, then and instead of the price here, rejecting here and start moving to the downwards, it doesn't do that. It doesn't do that, but it breaks through. It breaks through the the order block, the supposedly order block, and making it and breaking it through and breaking through, making it the breaker. That's where the name comes from. That's where the name comes from. So I'm going to come again. A breaker is just the last up close candle or the last bullish candle at the swing high before swiping the low. I showed you the swiping of the low, um, and instead of the price rejecting the 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 breaker, the supposedly to be order block, it breaks through that order block, making it a breaker. That's where the name literally comes from. So we're going to stretch it up out to this point and up, out like this. So you can see that you can see this. Our entry will be from this area, and our stop loss will be right below the breaker body. So guys, you can see how tight these stop losses are. They are really tight. Like I mean, like 14, 15 pips tight, as to 77, probably maybe 80 pips, as to 80 pips. So you can see the risk reward ratio is really crazy. It's really crazy because our take profit will be right here. We use the recent previous high as our take profit. So this one gives us 80 pips, this trade. Guys, this is actually true. You can see that I'm not drawing any candlestick patterns to fit my strategy, but my strategy is fitting what the candlestick pattern show. So that's where the take profit will be. So probably it will be hit around this area as price will be breaking through to this area. So this is where my take profit would be hit around this area. So as price was doing that, it gave us another candlestick value. So guys, you can see that this is real and you can go on and on, and it is ridiculously unbelievable, guys. This thing will stop you, will make you stop blowing accounts and losing money. Trust me, it will make you stop losing accounts. It will make you lose money. It will make you stop losing money. it will make you lose, it will make you stop blowing accounts and losing your money, and it will make you regain all your money that you lost. So trust in this thing, guys. So we can see that this, and we know that price is obviously going to what, to come down and clear this. So what are we going to do? We're going to wait for it to formulate something. So you can see we have a breaker right here. So as you can see, the breaker is also in alliance with our key support area that I drew with the black line right there. As you all know from the rules of the order blocks of the as you all know from the rules of the order blocks. So we have another here that signifies that is coming to the down. It's going to drop to the downside. So another trade will be right here. So clearly inside of here. Then our take profit will be here. Why? I'm going to show you again. Just as the other trade that we once took, our stop loss right below here, the manipulation. So since there has been manipulation, you have to take the trade, a confirmed trade. So as you can see here, the trade would have been because of this engulfing candlestick pattern. So our stop loss will be right below this engulfing candlestick pattern. So as you all know that we are in this game to respond and react to price, not to tell price how to act. Let me repeat myself. We are in this game to respond and react to market and to market price, not to tell market how to move or how we want it to do and what we want it to do, guys. So yeah, make sure you get that to stick within you and you resonate with it. So as you can see here, we have like a double. These are the moves that we are looking for, that we really want. We really should pray for, wish for to happen, where we have like these very big uh candlestick value gaps. We know that large amounts of money are going to be made. So why I put my take profit here is because of this OB here and these beautiful babies right here. These are like babies. So as you know from our bearish order block, the highest up close candle, that's the last bullish and the week included. So where the take profit will be, there'll actually be another entry to the what, to the downside. So instead of you holding this trade and hoping it to get to 170 pips and all that bullshit, you're not going to encounter such an error. Why? Because you now know this, you're now educated, your eyes are now opened, and you now know where to exit, where to enter, and where to stop, where to get stopped. I hope you get what I mean there. I hope you get what I mean. I hope you get what I mean. So, as you can see, another entry. So this one again, it is where it is going to stop. It's going to stop right here. Why? Let me show you. You now have the idea. So these things repeat themselves, guys. They repeat themselves. They actually, this is not like really far ago. It's like 7 June, about 30 days ago. So it's not really far. So let me speed up a bit. Order block, and we have a candlestick value here. We have it here. Maybe you're not able to see this one of this very big candlestick. We know that it is going to come down, so our exit will be because we'll be right in this air block here. Sorry, right in this order block here. because you know that it's going to come to the downside, and we're going to take it to the bull. We're going to enter trades buy. We're going to enter buy trades into it. So that's why I removed, so that you could clearly see why. And the trade, we're going to close it right at this. Why? Because of another order block. Why? Because of another order block. Maybe this red stop loss is not. You can see this. The highest what? Up close what? Guys, as you can see, guys, how many trades have you entered now? How many trades have you entered? Let me not remove I. How many trades have we entered right now? How many trades, guys? How many trades? How much money? How much money would you have made and recovered from these moves up to this point? Why? Since we have another fair candlestick valid gap here, guys, these things has to resonate within you. It has to get into you, guys, so that you really understand what is happening, going on. So another trade here. Another trade here. I just stopped explaining because I now know that you got the idea. You have the idea now. I'm just going to measure another fair value gap right there. I'm using my finger instead of the mouse. I hope you can see the mouse. Another fair value gap right here. Order block again. Right here. This one was a big mover, guys. This one was a big mover. Was a big mover. Tight stop loss to maximize the risk reward ratio. So guys, my presentation ends here, but it just does not end before I calculate how much you would have made. 70 pips. Let me just 70 pips. Over there. 50 pips. Want to show you how magical this is. Oh, part here. 60 pips. I'm not traded below. No 60 pip. So guys, you can see here, there's nothing I'm faking here. There isn't even any chance for me to fake anything here. 50 pips. This is better than me showing you how much money I make. Showing you how much money I make and how I make it. You see? 55 pips. And on some instances, I'm even putting less pips, less number of pips. Let me calculate on this big move here. Let's see if it is the winner. Oh, sadly, I thought it was going to get to 100. Well, it didn't, but then it's fine. Well, my take profit would be around this area because it is where my significant key support area, and I have the lowest swing low there. The recent peak low is over there, so I'll be looking to exit around that area. That's the reason why I wouldn't have even made more from this down move here, because I would have exited way earlier. So guys, that's 80 pips. I'm pulling out my calculator right here. 80 pips, 80 pips plus 55 plus 50 plus 60 plus 50, 70, 80, another 70, 90, then 119 pips, making it a total of 724 pips. Thank you, God. 700 what? 24 pips. So guys, thank you for watching this video. If you learned a lot, please kindly subscribe to this button if you are new here. If you are a regular, please smash the like button and please continue sharing, and thank you for always supporting. I'm grateful. And guys, let's make this money, let's make this money, let's make this money, let's make this money. Peace out. Bless up.